And here we're working on technologies that can enhance oil sands recovery and improve both the economic and the environmental performance of the oil sands. So the technologies that probably give me the most excitement are technologies that reduce the environmental footprint by using less steam in the extraction process and start to introduce hydrocarbon solvents, whether those are basic propanes or things, in the stream to help liberate more and more bitumen at a lower and lower cost. And we're working on a range of technologies that fit into that category. We've talked about over the next 5 years how we'll reduce the carbon intensity of our existing operations by 10% just through improvements in applying technology and improving the reliability of our operations. We've also flagged further improvements that we believe and are prepared to make through new projects such as our Aspen, which is a solvent-assisted SAGD project, which is going through final stages of regulatory review. And we've also flagged technologies that we were able to show people today that could go even further and reduce carbon footprints as much as 90% from the base oil sands operation level.
When do you expect some positive news on Aspen?
You know, we're in the late stages of it. The process has certainly went on longer than we would have anticipated. We've addressed the questions that have been asked by the regulator. We've worked statements of concern with indigenous groups. So I'm hopeful that in the next few months we'll get a positive final decision and approval on the Aspen project that we can then look at and see, you know, if there are any unique conditions with it before we make a decision to proceed.
One of the things we're hearing about is all this innovation, but you've also been quite vocal when it comes to the impact of all the regulatory environment that we've been facing here. Is there any reason to believe that the governments are listening to what you have to say?
I think it's important that we recognize that the oil and gas business is truly a global business, and so we compete for and attract competitiveness, or investment capital on a global basis. So investors will look at whether that's lending institutions or investors. They'll look at the relative attractiveness of a Canadian investment against an American investment or anywhere else in the world. So for us to be competitive on the Canadian side, market access is talked about a great deal. Get additional pipeline capacity so that we get a fair and competitive price for our production, our products. In addition, a regulatory efficiency and predictability so that we know as we go through processes, if we meet the requirements, we can have confidence and assurance that we'll have an approval at the end is fundamental. And then the overall fiscal competitiveness and all the various forms of taxes and fees. So yes, I have been spending a fair bit of time talking about what I think is that formula for global competitiveness. I do think we have willing audiences. I think folks are increasingly understanding the importance of oil and gas at a national level, not just in big macro measures like GDP, but certainly on employment and how it improves, you know, people's lives. And now it's a matter of working together, government and industry, to find those sweet spots, those solutions on how we can achieve some of the broad federal and provincial objectives, but do it in such a way that we enhance the competitiveness of the industry.
We have seen a number of major international companies pulling out: Royal Dutch Shell, ConocoPhillips. What is the global sentiment about Canada right now when it comes to our oil sands and investing here?
There is a cloud of uncertainty. There's a question mark. We have investors, not only Canadian investors, but U.S. investors, and we have a number of European investors. And when I talk to that investment community, as well as potential investors, there are questions. And their questions generally relate to the competitiveness of investments in Canada versus other alternatives. And some of the areas of particular concern, certainly the pipelines, the expanded market access is kind of first and on the front of everyone's mind. But then it also are things like the regulatory approvals. Can you get approvals for new pipelines, new projects? And so today we talked about the things we can do in terms of technology, but clearly in these other areas there needs to be a partnership between industry and government to move those forward.
Well, market access is obviously a big thing. We're talking about that a lot these days. Have you been approached by the federal government for Imperial to possibly put some money into that project when it comes to Trans Mountain?
You know, I would say we are putting money into that project because we're a committed long-term shipper. And the way a contracts like this, ship or pay commitments, we're either going to, if the project's built, if and when it's built, we will either ship our oil and products or we'll pay as if we were shipping them. So one way or another, I look at it as we are already a owner, a committed partner, just in a little different sense than the sponsor of the project. So I think in that case, we have already stepped up to the table and said, we support that project, and we're putting our money where our support is.
And that's it. There's no further investment then.
Yeah, I think that's generally, we look at what we're good at. We're a heavy oil producer. We're a light oil refiner. The midstream investments that we make tend to be very supportive of the specific asset at hand. So looking at major infrastructure projects, we tend to be shippers in those versus owners.
Okay, and my last question would be, you have said in the past that you're not looking to further develop in the oil sands given the regulatory environment. So are you doing that now just more by innovation in terms of trying to put your money that way?
Well, we have an incredible resource base of opportunities to continue to invest and grow. And in recent years, with the startup of our Kearl Oil Sands project was the biggest investment in the company's history, and an expansion called Nabier at Coal Lake here recently. And over the last few years, what we've been doing is the technical and commercial work to get ready with what could be another tranche of growth. Aspen, I've mentioned, there's 2 phases at Aspen. If and when we proceed, we'd go the first phase, but there's a companion second phase. We've recently received a regulatory approval for yet another expansion at Coal Lake. So there's a series of opportunities that we believe can be technically competitive. Now what we'll need to convince ourselves with things like market access and some of the others that they're also commercially competitive. So when that confidence is there, I see Imperial, just like we have over our 138-year history, being ready to step in and continue to invest and grow.
I do have to ask one more. Of course, Syncrude, we have some issues there right now. Steve Williams has said there's just not a sense of urgency among the other owners. How do you respond to that when it comes to getting it back up and going?
Well, we're a 25% owner in Syncrude. It's a very, very important asset to us. It has fallen short of all of the owners' expectations in terms of reliability. When it's operating well, it operates very well. It just doesn't operate as often as it needs to very well. Speaking for Imperial, and of course there are other owners, we are focused like a laser on anything that we can that can enhance the value of that asset for our company and for our shareholders. And working with the other owners is something that we have done before and will continue to do.